how to read candlesticks like a pro trader. Make sure you like and subscribe so you can stay up to date with all of the valuable information that's going to come out on a weekly basis. What is a candlestick? A candlestick is a bar on a candlestick price chart that provides a quick overview of market movements and sentiment. It displays the opening price, the low price, the high price, and closing price for a specific time frame. Traders can analyze patterns on candlestick charts to predict market movements. Understanding candlestick components. Candlesticks in their default settings typically have a red or green body, which can be customized to suit individual preferences. Along with the body, candlesticks also feature upper and lower shadows, each which conveys distinct information. So the green means that the market has moved up. The market is bullish over the period of the candlestick. Red means the market has moved down and the market is bearish over the period of the candlestick. The upper wick shows the highest price reached during the period, and the lower wick shows the lowest price reached during the period. So if we take a quick look at this bullish candlestick right here, here's the highest price that it went to, this long wick right here. And here's the price that it closed at. Here's the price that it opened at, and then the buyers, they pushed this candle up towards this price point. And here's the lowest price point that we reached. However, we bounced off of this level when we opened, and then we went all the way up here. And then when the candle closed, depending on the time frame, it closed right here. Now, let's go to a bearish candlestick. Here's a bearish candlestick right here. So here's the opening price, and the sellers, they dropped it all the way down here to this low price. And after this candlestick closed, it closed down here. But before we closed, we had a high price up here. However, we dropped all the way down here and closed at the bottom. So whenever you see a red candlestick similar to this one, that means that we closed lower than the opening price. If you see a bullish candlestick similar to this one, that means we opened and we closed higher than the opening price. Now we're going to go over the candlestick body. The body of a candlestick on a trading chart can provide valuable information about the price action during a specific time frame. The body represents the difference between the opening and closing price during that period. If the body is filled or colored, it means that the closing price is lower than the opening price, indicating a bearish sentiment. On the other hand, if the body is green, it means that the closing price is higher than the opening price, indicating a bullish sentiment. The length of the body can also provide insights. A long body suggests strong buying or selling pressure, with a short body indicating indecision or a lack of significant price movement. Keep in mind that candlestick patterns are often used in conjunction with other technical analyst tools to make more informed trading decisions. It is important to consider the overall market content and other factors before making any trading decision solely based on candlesticks. Candlestick time frames. Candlestick analysis involves understanding the basic components mentioned earlier. Different candlestick bodies are observed on each time frame, with higher time frames providing better confirmation in a particular direction. So now we're actually going to go over some SPY 1 minute, 5 minute, 15 minute, and 30-minute time frames in Thinkorswim. Okay, so now I have the SPY chart pulled up from this past Friday. So this past Friday, it was actually a bullish sentiment for the overall market. If you look at the chart, I had support at $477, and I had resistance at $479.50. These numbers were actually gathered from the pre-market data. So in pre-market, we had a high of $479.47. And we had support holding at 477. But let's look at the candlesticks. So if we look at the 1 minute time frame down here on the open, as you can see, we have different candlestick patterns on the open on the 1 minute chart. Now on the 5 minute chart, we also have different candlestick patterns on the 5 minute chart. And when we open, as you can see, we had 5 minute bearish candles because they were red. Now, as time progressed by, the buyers came in after 9:45 a.m. and then it was a bullish sentiment. So the bulls started buying the SPY up, and then we started to trend up a little higher, and then we got a rejection at $478.38. Let's look at the 30-minute time frame. On the 30-minute time frame, we had green candles for majority of the day. That's why in some cases, using a higher time frame, you can get more of a confirmation for the trend direction. If you look at the 15-minute time frame, the 15-minute time frame was also bullish as well. And this yellow line that I have on my chart, that's actually VWAP. I'm actually going to save that for another video. But whenever you see candlesticks trending above VWAP, I would consider that current time frame bullish, because as you can see, these candlesticks, they were all trending above this VWAP indicator. And what did we do for the remainder of the day? We started to trend higher, and we also broke above our key level of resistance, which was $479.59. So if you see something similar to this in the near future, I would recommend focusing on the next whole dollar level, which would be $480. And then you could have rolled the $480 calls all the way up to $482.72. You could have sold for a nice solid profit. Now we're going to transition back to our PowerPoint session. So now we're going to cover the top 5 candlestick patterns for trading, and we're also going to use real world examples. So we have a full body bullish candlestick on the left hand side, and we have a full body bearish candlestick on the right hand side. Whenever you see these two type of candlesticks on the trading chart, it's giving you confirmation that it's certainty within that direction. So let's say, for example, if you see a bullish candlestick and it's breaking above VWAP, 9 times out of 10, it's a possible strong uptrend in that direction. But you got to make sure that the bullish candlestick doesn't have any wicks on it. This is a full body bullish candlesticks. So whenever you see something like that, it's a trend towards the upside possibly. On the other hand, let's say, for example, if you see a bearish full body candlestick similar to this one that's on the right hand side, and it's dropping below VWAP, it's a strong possibility that the sellers are going to start taking over. And if we're trading above VWAP, we're 9 times out of 10, the market sentiment, it'll change to a selling pressure. But you also got to use the other time frames as well, such as the 1 minute, the 5 minute, the 15 minute, and the 30 or hourly time frame to get a more confirmed, sentiment, whether it's, on the buyer side or seller side. The next candle that I'm going to go over with you, it's uncertainty doji candle. So let's say, for example, if you see an uncertainty doji candle in an uptrend or a downtrend, the selling or buying pressure at that time, it's basically telling you that the market really doesn't have a clear direction of which way it want to possibly go. So whenever you see a candle like this, you want to pump the brakes and wait until you have a full body candlestick with some additional confirmation. The next candlestick patterns that I'm going to go over with you, it's a bullish and bearish engulfing candlestick pattern. So let's say, for example, a bullish engulfing candlestick pattern, you want to see a green bullish candle engulf the previous candle. So if you look at this red candle right here, you see how this full body green bullish candlestick came in and engulfed it. So basically, whenever you see something like that, it's a possible reversal that's about to, take place towards the upside possibly. So if you look at this example down here, you see how we engulfed that candlestick, and then we had the subsequent candles come in, and then the trend started to reverse. And that's what we see in some cases on a weekly basis with SPY. Now let's go to a bearish engulfing candlestick. So a bearish engulfing candlestick, that would indicate that it's a possibility that the sellers are about to take control of the market. So the previous candlestick that I just went over, the buyers were in control. Now with this candlestick, the sellers, they're in control. So if you ever see a bearish engulfing candlestick similar to this one, engulfing a previous, green candlestick, it's a strong possibility that the trend is about to change, and you want to start paying close attention to the selling pressure. The next candlestick that we're going to go over, it's a bullish hammer and an inverted hammer. So let's say, for example, if you see a bullish hammer and a downtrend, a bullish single candle reversal pattern that is formed in a downtrend, it's a strong possibility whenever you see a candle similar to this one, the market is about to possibly reverse. So you want to start paying close attention to the buyers in the market sentiment. If you see an inverted hammer, you want to start paying close attention to the buyers as well, because it's a strong possibility that a reversal is about to take place in the market. Now we're going to cover a bearish hanging man and a bearish shooting star. So it's the opposite of the candlesticks that we actually, just went over. So let's say, for example, if we're in an uptrend and you see a bearish hanging man, that's a strong possibility that the sellers are about to start taking over. Or if you see a shooting star in an uptrend, that's also a strong possibility that the sellers are about to start taking over, and you want to start paying close attention to the chart to see if we're going to hold VWAP. If we break below VWAP, the market sentiment is definitely, bearish for that current time frame. Okay, family, so we just went over the top 5 candlestick patterns that you want to pay close attention to. Now let's go back to the chart and look at the chart. So if we look at the chart on the 15-minute time frame in pre-market, you see how we had a bearish engulfing candle. It engulfed the previous 15-minute candle that was at 8 a.m. And then if you look at the chart, we had some selling pressure following that bearish engulfing candle. Now, let's go to a bullish candle. So if we look right here on the 15-minute chart, we have a 15-minute bullish candle that started to, I wouldn't necessarily say that this candle engulfed, this one, because it didn't drop down to this level. But this 15-minute bullish candle, it's definitely trading higher than this, 15-minute bearish candle right here. So once this 15-minute, bullish candle came into play and it reached a new high, that was a strong indication that an uptrend was about to take off. And if you look at the chart on the 15-minute time frame, the buyers just started coming in, and then we started to trade higher and higher. And if you look at this yellow line, we were also holding VWAP, family. So in some cases, you may see a bearish candle above VWAP, but in some cases, that doesn't always mean that the sellers are about to take over. Now, if we drop below this VWAP candle like we did right here, then that's when you want to start paying close attention to the puts. But if we're holding VWAP and you see green candles on the chart, you want to pay close attention to the call options and trade with the trend. Candlesticks are essential for understanding trading charts and market sentiment. Mastering candlesticks will enhance your future trading. Thank you for reviewing this YouTube video. Remember to like and subscribe for more valuable content.